Hi, this is Michael Regan with the Regan Team Home Loan Group, and welcome to this week's Real Estate Roundup. First, we're going to start with last week's big ADP jobs report. The ADP jobs report for December showed that there were 41,000 jobs created, mostly in medium-sized businesses. Now to the BLS jobs report that showed that 50,000 jobs were created in the month of December, and the unemployment rate went down to 4.4%. The one thing to note is that the BLS jobs report has been wildly inaccurate. In fact, between October and November, the revisions were negative 76,000 jobs. That means the BLS report overreported job creation by 76,000 jobs those 2 months. The big report for the week is the CPI, or Consumer Price Index report, and it was within market expectations. It showed that the headline number was at 2.7% year over year, and the core number was at 2.6% year over year, again within market expectations. Now, normally when you have a cooler CPI report, so you see that inflation is coming down, you would have expected mortgage rates to get better. That didn't happen this week because of geopolitical news out of Japan. Yields rose in Japan, and that caused yields around the world to rise. So unfortunately, we didn't see the benefit of lower rates, even though we are seeing inflation come down. One of the most popular searches that first-time homebuyers use is it a good time to buy? I'm going to show you two different charts that should help give that first-time homebuyer that's asking that question some clarity. One is the most recent update of active listings. And what this chart shows is that while some states do have more inventory than they had in 2019, that's not the case for California. Our population has grown considerably over the last several years, yet our inventory has not kept up. And with that lack of inventory, that's going to help push home prices up further. And to that point, hundreds of real estate experts were polled about what they think home appreciation is going to be for 2026. The average was 2.4%. Now, that may not sound like a lot, but at the end of 2026, that's $12,000. That's a sizable gain. Then if you look at the cumulative appreciation over the next 5 years of 20%, that same $500,000 house, if you wait 5 years, is going to be worth $600,000. So that's a $100,000 gain by buying now instead of waiting, just with normal appreciation. And these numbers are based on very tame home price appreciation. And if rates come down anymore, that'll just increase the pressure for prices to continue to go up. What's more impressive is the return you get on your money. So say on a $500,000 house, you only put 10% down, so that's $50,000. But in that first year, you gain $12,000 of equity with only a 2.4% home price appreciation. Well, what that means is that you earn 24% on your money. That was your true return. Now, how many things are you going to be able to invest in that'll make you 24% in the first year? The great news is over the last several months, there's been a lot of pressure to lower rates. Well, we've seen that rates are at their lowest level in over 3 years. So the good news is if you're looking to buy, now is definitely the time. And that's it for this week's Real Estate Roundup. And don't forget, we specialize in down payment assistance for first-time home buyers, reverse mortgages for seniors, and cash flow loans for business owners. Have a great week.